For decades, Chanel remained untouchable, growing from $10 billion to $18 billion as rivals chased trends and headlines. But as profits soared, the brand's social engagement quietly collapsed, and critics called its signature designs repetitive, even invisible. If Chanel can succeed without cultural power, why did it bet everything on an outsider with a radically different philosophy? The real story is not just about creative directors, it is about whether the most famous name in fashion has lost touch with what made it matter. Tweed jackets, camellia brooches, and ropes of pearls have been the visual language of Chanel for generations. Season after season, runways offered subtle variations on this familiar vocabulary. Under Virginie Viard, the house doubled down on these motifs, treating them almost as sacred relics. Each collection circled back to the same codes: boxy jackets in pastel tweed, delicate camellias pinned to collars, layered strands of pearls draped over crisp white shirts. The silhouettes rarely strayed from the classic, softly tailored skirts, double-breasted coats, prim blouses, and quilted handbags swinging from chain straps. Even the color palette seemed to obey an unspoken rule: black, ivory, blush, and navy, with a rare pop of gold or red for punctuation. Critics described the effect as refined, restrained, and timeless, but also predictable and risk-averse. Reviews in Vogue and Le Monde noted the gentle nostalgia and museum-like reverence that defined Viard's approach. The runways themselves became quiet rituals, models gliding through sunlit salons or echoing halls, their looks echoing sketches drawn decades earlier. Where Lagerfeld once transformed the Grand Palais into a bustling Parisian street or a sandy beach, Viard's shows often felt like intimate gatherings, the spectacle dialed down to a whisper. Accessories, too, followed the script. The classic flap bag, with its diamond quilting and interlocking C-clasp, remained front and center. Camellia appliques appeared on shoes, belts, and even hair clips. Pearls adorned everything from earrings to handbag handles. Each detail reinforced a sense of classic continuity, as if the brand were guarding a precious inheritance. In interviews, Viard spoke of honoring Coco Chanel's purity of line and spirit of freedom, but her interpretation leaned toward preservation rather than provocation. For loyal clients, these motifs offered comfort, a promise that Chanel would never chase fleeting trends. For younger audiences and critics, the repetition signaled caution. The word invisible began to surface in reviews, not because the clothes lacked beauty, but because they blended into the background of a fashion world that now prizes narrative and novelty. While Louis Vuitton and Dior staged viral spectacles with celebrity-packed front rows, Chanel's runways became exercises in subtlety, almost daring viewers to look closer. Yet within this restraint, the codes themselves grew more prominent, not less. The very elements meant to preserve the brand's soul became its most visible features. Tweed, camellias, and pearls, once radical in Coco Chanel's hands, became emblems of continuity, woven so tightly into the fabric of the house that they now defined its public face. In protecting its core symbols, Chanel made them inescapable, turning visual consistency into both shield and signature. By 2023, Chanel's financial performance reached an all-time high. The company's annual revenue soared to 19.7 billion euros, making it one of the most profitable luxury brands in the world. Price increases on core products, especially handbags, played a central role. The classic flap bag, for example, more than doubled in price from $5,800 in 2019 to $11,300 in 2025, far outpacing inflation and even Hermès's legendary Birkin. Handbags alone accounted for nearly 80% of Chanel's revenue, a concentration unmatched by most competitors. Expansion into Asia-Pacific markets fueled the numbers further. Over 50 new boutiques opened across China and Southeast Asia between 2020 and 2024, driving double-digit regional growth. Even as global economic pressures mounted, Chanel's strategy of scarcity and exclusivity kept demand strong, at least on paper. The brand's capital expenditure hit a record $1.8 billion in 2024, with investments pouring into new flagships, beauty boutiques, and high jewelry salons. Yet the cultural signals told a different story. While revenues climbed, Chanel's share of the luxury conversation shrank. On Instagram, follower counts rose steadily, reaching 60 million by 2024, but engagement rates slipped from 0.85% in 2019 to just 0.62% 5 years later, according to social bakers. TikTok, the new arena for fashion virality, exposed an even starker gap. Chanel's following grew to 15.7 million, but its video views lagged far behind rivals. Dior and Louis Vuitton routinely drew 10 times as many eyes with celebrity-driven campaigns and headline-grabbing stunts. Industry trackers like Launchmetrics reported a 30% drop in Chanel's share of voice among luxury brands since 2019. While Louis Vuitton and Dior captured up to 22% of the conversation through viral collaborations and TikTok spectacles, Chanel's slice slipped to under 9%. Even during major collection launches, Chanel's spikes in mentions paled next to the viral surges generated by its competitors. Google Trends reflected the same pattern: fewer breakout moments, less search interest, and a growing sense that Chanel was fading from the cultural foreground. This paradox, record-breaking financial growth alongside shrinking cultural momentum, raises a fundamental question. Can a luxury house thrive on scarcity and tradition alone? Or does cultural power now require constant reinvention and digital spectacle? If the numbers say one thing and the culture says another, which metric matters more for the future of a brand like Chanel? Pause here and weigh in. Should Chanel protect its heritage at all costs, or does it need to evolve more aggressively to stay relevant? Drop your thoughts in the comments, and if you value deep dive analysis like this, hit the like button to support the channel. Beneath the surface, the numbers point to deeper vulnerabilities. The refusal to sell, ready to wear online, the heavy dependence on handbags and price inflation, and the absence of a charismatic founder figure all shape Chanel's current position. The house remains one of the last major luxury brands under private family control, resisting the conglomerate playbook that has propelled its rivals. The question is no longer just about creative direction. It is about whether the Chanel system itself is built to adapt, or if these record revenues are masking the start of a slow cultural fade. This is not about whether Mathieu Blasi is talented, but whether Chanel as a system is capable of change. Position this moment as either a long-term strategic reset or the beginning of a slow cultural fade, profitable and powerful, but increasingly disconnected from the fashion conversation. Subscribe for more deep dive breakdowns on luxury brands, fashion power shifts, and the hidden business decisions shaping the industry. Comment below on whether this marks Chanel's rebirth or the start of its decline. For almost a century, Chanel has remained under the private command of the Wertheimer family. Alain and Gerard Wertheimer, grandsons of the original backers who partnered with Coco Chanel in 1924, hold absolute authority. Their control is shielded from public markets and outside scrutiny. Decisions flow through a small circle: the brothers, their discreet family office, and a handful of trusted executives. There are no public board meetings, no quarterly earnings calls, no activist investors pushing for short-term gains. At Chanel, change unfolds over decades, not quarters. Stewardship sits at the heart of this system. The Wertheimers' philosophy is built on preservation of both the brand's mystique and the family's fortune. Major capital investments, like the $1.8 billion spent on boutiques and ateliers in 2024, are funded internally, without outside debt or dilution. Moose Partners, the family office, quietly manages billions, channeling Chanel's estimated $4.5 billion in annual profits into ventures ranging from health tech to private banking. This structure keeps the family's independence intact, reinforcing their ability to act on their own timeline. Within Chanel, authority is tightly held. Alain and Gerard retain final say on every significant move, creative leadership, expansion, even which products reach the market. Their preference for privacy is legendary. Neither brother grants interviews, and both cultivate an image of near invisibility. When Karl Lagerfeld was hired in 1982, Alain made the decision personally, overriding management. The same pattern repeated in 2019, when Virginie Viard was promoted after decades as Lagerfeld's deputy. Continuity and loyalty are favored over outside disruption. This governance model shapes Chanel's appetite for risk. The refusal to sell ready-to-wear online is not just a marketing stance. It is a policy rooted in the belief that exclusivity is best preserved in physical boutiques. Attempts to pilot digital sales have been quietly blocked, out of concern that accessibility could erode the house's aura. The same thinking guides capital allocation, investments are deliberate, product lines remain tightly controlled, and pricing steadily rises to reinforce scarcity. Chanel moves at its own pace, insulated from market demands, but slower to adapt to cultural shifts. Bruno Pavlovsky, president of fashion, manages day-to-day operations but ultimately answers to the Wertheimers. His mandate is to execute the family's vision, not to set it. Even large-scale projects, Asia-Pacific store openings, and the Grand Palais renovation require family approval. There is no boardroom drama, only the quiet certainty of private stewardship. This architecture of control has shielded Chanel from the volatility that often shakes public companies. There are no hostile takeovers, no pressure to chase quarterly growth. Yet the same insulation that protects against risk can also breed inertia. While rivals like LVMH and Kering move quickly, pooling resources and launching global campaigns, Chanel's private model favors patience and restraint. The family's commitment to continuity preserves the brand's myth, but narrows the space for bold experimentation. Louis Vuitton and Dior have rewritten the rules of luxury by embracing a new kind of spectacle, one built for the age of algorithms and endless timelines. Their playbook is simple: dominate the conversation everywhere, all at once. In 2022, Louis Vuitton's menswear show in Paris drew more than 80 million live and replay views, powered by a front row packed with global superstars and a soundtrack by Tyler, the Creator. Pharrell Williams' debut as Louis Vuitton's men's creative director in 2023 turned the Pont Neuf into a viral stage, with the show's hashtag racking up over 5 billion views on TikTok in a matter of days. Each campaign is a carefully orchestrated event designed to be clipped, shared, and memed by millions. Dior's approach is just as relentless. Rihanna's Baby Dior campaign in 2022 set Instagram ablaze, while the brand's men's shows regularly feature actors like Robert Pattinson and K-pop idols, generating engagement spikes that reach well beyond the traditional fashion audience. On TikTok, Dior's videos consistently pull in 10 million or more views per campaign, thanks to a steady stream of influencer partnerships and behind-the-scenes content tailored for digital natives. These brands invest heavily in influencer contracts and celebrity endorsements, with social media budgets estimated at 2 to 3 times those of Chanel. This isn't just about star power. It's about engineering cultural moments that can't be ignored. Louis Vuitton's collaboration with Nike and Virgil Abloh's Air Force One drop in 2021 sold out instantly and generated more than $1 billion in earned media value. Dior's viral ballet campaigns and artist collaborations keep the brand in a constant state of reinvention, ensuring that every launch feels like an event. Their content calendars are packed with weekly releases, surprise drops, and collaborations that feed the appetite for novelty. Against this backdrop, Chanel's strategy of restraint becomes a double-edged sword. The house rarely courts influencers, preferring organic posts that highlight heritage and craftsmanship. While Louis Vuitton and Dior flood social channels with new narratives, Chanel's presence is quieter, focused on timelessness rather than trend chasing. The numbers tell the story. In 2024, Dior's TikTok runway videos reached 50 million views, while Chanel's topped out at around 10 million. Louis Vuitton's share of the luxury conversation climbed as high as 22%, with Dior close behind. Chanel's share slipped below 9%, a gap that widened with every viral campaign from its rivals. The result is an asymmetric battle for cultural oxygen. Conglomerates like LVMH and Kering use their global scale to amplify every campaign, cross-promoting designers, artists, and even entire product lines. Their agility allows for rapid pivots. 1 month a sneaker drop, the next a blockbuster runway show. Chanel, by contrast, relies on scarcity and mystique, a strategy that once set it apart, but now risks making it invisible in a market that rewards spectacle and speed. As the industry's center of gravity shifts toward narrative-driven engagement, the question is whether restraint can still command attention, or if the quietest brand in the room is simply being drowned out. In 2012, the price of a Chanel medium classic flat bag in the United States stood at $4,400. That year, a single 30% increase stunned the market, pushing the bag out of the realm of everyday luxury and into the territory of financial investment. The following years saw a steady climb: $4,900 in 2014, $5,300 in 2017, and $5,800 by 2019. But it was after 2019 that the pace accelerated. By 2020, the same bag cost $6,500. In 2021, it jumped to $7,800. In 2022, it was $8,800. By the start of 2025, the price hit $11,300, more than double what it cost just 6 years earlier and over 5 times the price from 2012. These increases far outpaced inflation, outstripping the cost of raw materials and labor by a wide margin. Chanel's pricing strategy became a phenomenon in itself, with the classic flat bag's price rising at an average rate of 12 to 15% per year between 2019 and 2025. For comparison, U.S. inflation over that same span hovered around 20% total. The price of a Chanel bag, meanwhile, rose by nearly 95%. This relentless upward march was not limited to the U.S. market. European and Asian boutiques adjusted prices in lockstep, often twice a year, closing regional gaps and fueling a global sense of scarcity. The classic flap, once accessible to a broad spectrum of aspirational buyers, now hovered at a price point that rivaled entry-level Hermes Birkins. In the resale market, vintage Chanel bags tracked these hikes, with older models sometimes reselling for even more than their retail counterparts. Each increase reinforced the perception of the bag as an appreciating asset, less an accessory, more a financial instrument. Independent analysts now weigh Chanel's future through 2 diverging lenses. On one side, some see a ceiling approaching for the house's long-standing model. They point to the numbers: handbags driving nearly 80% of revenue, price hikes outpacing inflation by a factor of 5, and a refusal to open ready-to-wear to online buyers. In their view, the strategy that powered Chanel's last decade, scarcity, exclusivity, and relentless price escalation, can only stretch so far before the brand's aura risks becoming brittle. The warning signs include a cooling resale market in China, where price sensitivity is rising, and a growing chorus of younger consumers who see Chanel less as a cultural touchstone and more as a financial instrument. Others, though, remain confident that Chanel's mystique will insulate it from the churn of digital trends. They argue that private ownership allows the Wertheimer family to weather short-term cultural dips, betting on the cyclical nature of taste and the enduring power of heritage. To these optimists, Blazy's quiet innovation offers a path to renewal, one that does not require spectacle or viral moments, but instead lets the codes of the house evolve at their own pace. As long as Chanel maintains its grip on desirability, the theory goes, cultural relevance will ebb and flow, but never disappear entirely. This split leaves Chanel at a crossroads. The risk is not an immediate collapse, but a slow erosion, where financial strength persists even as cultural power quietly slips away. Whether Blazy's approach can rewrite the scenario, or whether the system itself resists change, remains the question hanging over the brand's next chapter. Today, Chanel stands at a crossroads. It is an $18 billion empire, intact, but with a cultural grip that is uncertain. In an era where relevance is measured by speed, narrative, and digital reach, creative reinvention alone may not be enough. The real test is whether a system built on secrecy and scarcity can evolve before it becomes invisible. The future of luxury power is being rewritten, one silent risk at a time. Share your take in the comments.